Welcome to TradeTheNBI.com. This is John's reports for the 7th. Not a whole lot of a shock from yesterday. We had positive readings from NBI indicator as well as DOC with the move of orange coming below and green crossing red. Those are all buy signals, all happening exactly the same time. No reset of the steel, which means that at some point we're going to have a crossover coming lower here. That could be a little bit of a stumbling block as we approach the 61%, but we'll see if it's able to maintain itself, because we're already at a pretty extreme level. But this is the time where new fund money is coming in, so plenty of resources available and no other options to put anything, as long as the Fed is going to maintain the construct of trying to keep rates low enough to where it doesn't implode the credit situation. And with the market understanding that reality, they know the Fed is sort of constrained, which means they're going to allow asset prices to continue to accelerate, and that's not going to stop at any time soon. It's just a question of, will it have a significant impact in time for them to be of assistance for the general election? So far, I think they're probably a little too late. You may start to see the effects of what they do if they're able to. I just can't see them cutting at this particular stage unless oil continues to plummet. And given the world tensions, you now have France committing soldiers to Ukraine. Russia called in the ambassadors for Britain the other day, warning them that the use of their Storm Shadow missiles to attack Crimea, like the bridge and that, given today's the inauguration for Putin's new term. And the world tensions are going through the roof, as the Democratic leaders announced in the House, at least, that the idea of sending troops to Ukraine was just like a foregone conclusion. There are serious world events that could spiral things in an ugly way. But you can see yields on treasuries already declining, and with that, you're in a situation where inflation rising, low rates on treasury. I don't know why anyone would even bother buying a treasury, which means the only buyer is going to be the Fed, which will increase their balance sheet. Not that they care, but it's just an interesting configuration developing within their oil. Still too high to do anything as far as assisting from a decline in the rate of increase. Fine, a couple of months will decline, but you already have this buildup that took place over the last month and a half that's going to get absorbed here into the summertime. So difficult, I think, is the best way to describe how things are going. It's a little bit easier than in the 70s, where inflation started spiraling out of control, but there's a tipping point, and nobody's quite sure where that one's going to be relative to how the Fed handles things in the modern era. From a euro standpoint, of course, that's a golden situation. They don't have to spend as much for euros converting into dollars for buying oil and that, but it's still going to be a boon to commodities. There's no other place for them to go but up. Fine, you might get some stagger or pause, but the trajectory is clear. And there's no question about that, and that's going to favor both crypto as well as most commodity classes. It just depends on their relative need and demand capabilities. ETH still suffering some of the difficulties of the desire for tokenization by the if you want to call it the movers and shakers of the financial world, versus the idea that you're creating an alternative currency, and that doesn't sit well with governments, because at the end of the day they need to control currencies. That's their power. You have to take the labor of others and use it for your own means, because of course they know how to spend your money better than you do. Because why wouldn't you want to just give your money to buying weapons and creating conflict? Most people would think, hey, let me spend some of that money building infrastructure, doing things that actually help in my neighborhood. But hey, this is the story, and from a reading standpoint, pretty easy. The buy signals came in after the first pause there, when you had a little bit of negativity from an NBI reading, but then once the magenta moved back up, the resurgence, and that buy pretty clean. So pretty straightforward action from that standpoint. Intraday, It's also pretty clean. There really wasn't a whole lot to do once it started up. You just sideways, further up, sideways, further up. And that's literally where we're at here in Post Market. Pretty flat, actually, exactly at a zero stage this time. But so there you have it, climbing the wall of fear, as they call it, where there's lots of real concerns out there, but barring anything actually happening, it's a net positive. So that's the long and the short of it for now. As well, you get any new updates, we'll continue to follow it along. But for now, we just follow the readings, and they're still positive. So that's the long and the short of it. And anything relevant, I'll put it on the Skype chat. Have a good one. Trade well.